Hey, Bulls and Bears, how are we doing? I hope well. Back with another dose of economic reality. And we've got some pretty important news coming out here. Credit scores abruptly plunge as Americans stop paying down debt. I read that exact headline. This is a report out of Bloomberg. Now, to everyone listening here to this report right now, no one here is surprised by this. We said it was going to be a slow motion collapse. We've seen the manipulation, how they propped up the economy, even when consumers were barely making it. Somehow everybody made it through 2020, the health crisis, all the money pumped into the economy. I believe it's 40% of all money in existence was printed and created or digitized just in the past 3 years. So it's money creation gone wild to keep this economy propped up. Of course, we've seen the consequences. We've seen the rising cost of living, inflation. We've seen unaffordability get even worse. And now we have this where the consumers are finally starting to crack. Over the past few years, tens of millions of consumers witnessed a remarkable increase in their credit score. Why is that? Well, all the new money printed and created. And we saw savings plunge over 6 months ago now. We saw savings plunge down to, actually not down to, but below financial crisis levels. And we knew it was only a matter of time with this cost of living, this very low savings rate for most Americans before people are in big, big trouble. Now, the higher interest rates came in and they helped people that have money set aside to put in an account where you're going to make interest. You put it in a CD, put it in a certain savings account, you're going to make a little bit of interest now. It was near zero, but now with the higher rates, people can make 5% or even a little higher than that in a money market and other places where you can park your money now. The big problem is people are at near record low savings. So finally, when you can get a decent return on your money, a lot of people, majority of the population just doesn't have much money set aside to park it and get that interest. Now, even that interest is not going to keep up with inflation, right? And forget the numbers they tell you. The numbers they tell you are about 1/3 of the actual real cost of living slash inflation for most people. Let me read it to you right out of this report. Bloomberg is reporting Synchrony Financial is closing inactive accounts and capping card limits for a number of clients as macroeconomic winds mount. What we are seeing is people who are doing significant score migration, a 680 or 690 going to a 620. Synchrony Financial CFO Brian Wenzel said in an interview, that's what happens when people are tapped out. That's the same reason why we're seeing bankruptcies increase. Not just corporate bankruptcies, but personal bankruptcies for consumers. Also, we're seeing repossessions increase. We're seeing people not paying off their minimum credit card payment. We're seeing less people able to do that each month. And we knew it was just a matter of time. I always said I thought it was going to be the second half of this year. As far as the timing goes, I think it's going to accelerate from here. So I think we're going to see news like this increase in defaults, late payments, credit card defaults, you name it. It's going to increase and get much worse. So if you're in a position right now where you're saving money, and not just saving money, but if your savings is growing each month and not your debt, then congratulations to you. You are in a very small portion of the population. You're amongst a very few that are able to do that right now with the cost of living. I'm happy to say that I'm able to do that for now. Things can change on a dime, though. I could lose a job. I could have an injury and lose my health insurance and not be able to pay the hospital bill. And hospital bills can add up very, very quickly, right? So things can change. I'm not bragging. I'm just saying that things can change in a hurry. But I am fortunate to be in a position right now where I'm actually putting money away. Sorry, my light just went out over here. We're going to get into that a little bit more, but first, a quick word from our sponsor. It's about 1 minute. We'll see you back on the other side. The US dollar has lost 85% of its value since the 1970s when the dollar was decoupled from gold. And the government seems bent on continuing the tradition. From now until the next elections, the government can print as much money as they want. The last time they did that, inflation went up 9%. This means one thing: the security of your future and your family's future is all in your hands. make sure you freeze the value of the wealth that you're holding. Invest in gold with Noble Gold Investments. Gold is the one asset that is proven to withstand recession, inflation, and just about all other economic threats. Noble Gold Investments is here to help you if you want to invest in gold. You'll also get a 24 karat quarter ounce gold standard coin for free. Go to bullboomgold.com now. That's bullboomgold.com. Link down in the description of this video. Noble Gold, the only gold company that I trust. There's always a risk of investment and there's no guarantee of any kind. The Synchrony Financial CFO also went on to say, quote, folks who paid down debt, their scores had gone up and now they're reverting back to more normal performance, unquote. In the United States, consumers have racked up record levels of credit card debt. Worse than the financial crisis. This is an all-time high record of credit card debt. And you may say, well, it's only because there's more people now versus 2008 when the financial crisis happened. Well, it's not just more debt total. The average credit card debt per person is also at record levels. So you can't just blame it on more people. So we knew this was going to happen. We knew it was just a matter of time. Predicting the exact timing, I mean, nobody knows, but we knew that they couldn't hold this off forever. Now, could they come out and do something else to stop all this? Yeah, they'd have to make it to where people didn't have to pay their credit card payments. They'd have to send out more stimulus checks. They'd have to freeze foreclosures. They'd have to freeze car repossessions. But they don't have the excuse to do that now because there's no health crisis happening. All right. So when it just happens naturally with just the levels of debt being unsustainable, will they resort to those types of actions where they're sending out, stimulus checks and canceling loan payments and forbearances and all those things? I don't think so. There's always that chance. Nothing's guaranteed. Nothing's 100%, but it would be very, very wild and crazy for them to do those 2020 types of things here in 2023. Please let me know what you think down in the comments, but I don't think they're going to be doing those types of quote unquote rescues, if you know what I mean. Now, let's think about this here. Lower credit scores. What's that going to mean? More people are going to have a difficult time qualifying for loans. That means homes are not going to sell as much. Cars are not going to sell as much. More people getting foreclosed because they can't refinance their home. We have tens of millions of people now, students or former students, having to repay their student loans here coming up in the next few months. And it's going to be an economic storm the second half of 2023. It's already starting off here. We're only a few weeks into the second half of the year, and we're already seeing news like this. What other banks are going to come out here and start talking about how credit scores are plunging, how people are becoming late, more frequent on their loan obligations, including credit cards, car loans, you name it. And folks, this all goes back to the system of money. This is why this happens, because the creation of money and the fact that it's fiat money and it's not attached to gold, that's why this is happening, right? If it was really attached to something like gold, if it was backed by gold, for example, if we had a gold standard, they couldn't loan out all this money. They couldn't give people these enormous credit card limits of $5,000, $10,000, $20,000, $30,000. And if you look back just to the 90s, in the early 90s, most people didn't have credit cards in the early 90s, and people still got by. They just didn't have as much debt, and people actually bought stuff that they had money to pay for. Imagine that, buying something that you have the money saved to buy. So one of the reasons for the enormous cost of living is credit cards, is the system of money, is the system of lending, because when you have a bunch of people out buying stuff that don't have the money to buy it otherwise, prices are going to go up because that's demand. It's false demand. Same thing would happen if you sent everyone a stimulus check today for $10,000. You would see prices skyrocket. You would see car prices jump, food price, everything would jump up because so many people would be buying everything all at once, and you have that major supply demand imbalance. Also, the average credit card APR right now is about 21%. But when you're late on a payment or when you miss a payment, you can get a default credit score of the upwards of 28%, I think even higher in some states. So we're looking at big trouble for this economy. I have always said, try to be diversified in your preparation. Have cash in case we see buying opportunities somewhere, maybe falling car prices. I think that's likely right around the corner. Home prices, I think, will fall unless there's some massive intervention. It's really hard to predict a manipulated economy and manipulated markets. Technically, the stock market should have came down a long time ago, but it's completely controlled by billionaires. About 90% of all stocks are owned just by the top 10% of income earners. So, the places where you may expect deflation or crashing prices may not happen, and things that you didn't think would crash in price maybe will crash. But overall, we're still going to see certain things that are going to remain elevated. I think insurance is going to stay elevated, and it's been really nailing people, especially people in Florida, the home insurance bills, the car insurance bills, Texas, the states that saw a big influx of populations during the last few years are really seeing their insurance rates go up a lot. You have more accidents, you have more costly repairs, and it's still, we're not out of the woods as far as inflation goes by a long shot, even though they're telling us that reduced inflation is a big winner. Yeah. Inflation is less than it was last year, but it's still going up. It's still rising. So it's still dangerous times. And, so what do? We try to invest. I'm still stacking. My favorite thing to stack is still silver. The rates are pretty nice right now as far as having money put away, and even your retirement account. You can get 5% in some of these money markets. There's also the opportunity to invest in precious metals in your retirement account. Of course, we talked about that earlier in this video. Keep in mind, this whole illusion of this economic boom is based on borrowing and people spending money that they don't have. But that ball game is coming to an end. Now, as far as the bottom goes, that could really take a long time to play out. And how does it end? And how do we prepare? Well, come back to this channel. We'll talk about it. But please let me know what you think down in comments about the huge drop in credit scores. This bank, Synchrony Bank, freezing credit limits. Pretty soon is it going to be dropping credit limits like we saw in the financial crisis? So please let me know down in the comments. Otherwise, keep stacking, everybody. Thanks for being here and supporting this channel. Big love. Bye for now. Peace.